this. What we're going to do first is we're just going to give just an overall view of what this American Rescue Plan is, okay? And then what we're going to do is we're going to go into the specifics of what this is, and then we're gonna open it up for question and answer, okay? And so so just sit back. If you have any questions, you can either put them in the chat or just write them down and be ready to answer them, because I do want to have enough time so we can go through and answer all of your questions. So just so that you know, this opportunity that we're in right now, I just want to say in general, I have never seen in my 20 years of doing business, I have never seen anything like this as far as the support that the government has had or has given to entrepreneurs. And in the way that they've given it, this is so great for small businesses. And it's the easiest way to ever access money that I have seen over my entire time. So we're gonna have an opportunity now for Lisa to come and actually share with you some specifics. We were able to put these things together very specific for you as a small business. And once again, so you know the format, she's gonna go in, jump into this information. She's gonna do this for probably about 15, 20, 30 minutes maybe. And then we're gonna get straight into the question and answer portion. All right?
All right.
You can go ahead and take it from here.
Thank you, JR. As JR mentioned, I'm going to go through some of the specifics of the acts. I'm also going to go through not only the act, because the act is a continuation of a program that was started back in the year before with different COVID relief options for individuals and businesses. So they do build upon one another. So we're going to talk about some of those as well. As JR said, I am Lisa Lede Davis. I've been a CPA for over 20 years. And my focus has really been working with small to medium-sized businesses where the owners are engaged in their businesses and trying to provide options and services that help businesses thrive, survive, and especially going through these tough times, kind of make that change that's needed to adapt to the new environment that we're in currently. So we're going to start by talking about the American Rescue Plan, because it's the most current options that have been passed by our legislation to put things in place for individuals and small businesses. So as we focus on that plan, the plan was a $1.9 trillion plan. It included a $1,400 stimulus payment. It included expansion of unemployment benefits, kind of a continuation of the program before. It expanded the child tax credit. There was some state and local government aid, some funds for infrastructure and education, as well as a number of funds for COVID testing, tracing, and vaccination to help in the recovery effort. So when we talk about the stimulus payment, as we said before, the American Rescue Plan provided a third round of stimulus payments because it was built off of the programs from before. It was $1,400 for adults and any dependent. That is a caveat from some of the options before, where it was only dependents that were under a certain age, under 17. Now it's $1,400 for adults and any dependent. Like the plans before, there was still some earning limitations. And those earning limitations are actually a little bit lower now. So you have households of $80,000 or less for single filers, $120,000 or less for head of household filers, and $160,000 or less for married filing jointly. So basically, with the stimulus payment, it starts to phase out for a single individual around $75,000, and then it's completely phased out at $80,000. Same for head of household, starts about $112.5, and then it completely phased out at $120, and then from $150 to $160 for married filing jointly. So you want to consider that when you're looking at, filing your 2020 tax return. For this stimulus payment, if your 2019 was filed, they made the stimulus payment based off of your 2019 if the 2020 hadn't been filed yet. If you didn't qualify based on your 2019 return, but you do qualify now based on your 2020, you want to take some time and try to get that 2020 return in as soon as possible, because they are still going to be issuing payments. They're going to be reviewing those documents as they're coming in from the IRS and issuing payments to people that may have not qualified before. So when we talk about that, we want to focus on our tax filings. You want to consider the fact that if you have any adult children that have provided more than 50% of their support from their own income, you want to consider, if you claimed them as a dependent in the past, you want to consider them filing independently for themselves, because that will not only make them eligible for the $1,400 stimulus, they may also be eligible to claim the stimulus that they did not receive in 2020 when they're filing their 2020 tax return. So you want to talk to your tax accountant and figure that out and see what your options are there. Also, you want to make sure you're current on your return filings. If you did not have a 2019 return in file with the IRS and you hadn't filed your 2020 yet, you probably have not received that $1,400 stimulus. Some people had special conditions where they had to mail their 2019 return. Well, the IRS is behind on anything that was mailed into them. Last we checked, I think they were still working on probably things that were sent in around July 2020 on their 2019 return. So if that return is in the system as pending or not in their system at all, you may not receive a stimulus check. So you want to file your 2020 as early as possible so you can still go into consideration. If all else fails, if you do not receive the $1,400 this year, you can still claim it when you file that 2020 tax return or the 2021 tax return in 2022. So you want to do everything you can to get your returns in there up to date with the IRS so you can get your stimulus. If not, you'll still have a second opportunity on anything there. Try to file by the deadline if you can for consideration of the stimulus. I believe the IRS has said up until, if you file up until July, and you had not received your stimulus, but you become eligible with your 2020 filing, they'll still do the consideration. Unemployment benefits. So unemployment benefits was also a factor in this latest bill. They extended the 3 federal unemployment expansions that was first created by the CARES Act in 2021. This maintained that the federal government will supplement unemployment at $300 a week. If we all recall, that was down from about $400 a week before. And that's going to go through September 6, 2021. The plan expanded the weeks of unemployment from 24 to 53 weeks, and it contained a provision that allowed the first $10,000 of unemployment if you received on your 2020 taxes. So when you file those in 2021, the first $10,000 of unemployment is not taxable. So many people filed their returns before this provision went into place, which caused some changes in their return. The IRS recommended that they do not, and they repeated, do not file an amended tax return. They're going to go through all the returns that were filed before this bill, and they're going to have them modified, and they'll send automatic refunds if you were taxed on that unemployment income of the first $10,000. Of course, this will only apply to individuals with income of below $150,000. We're going to look at the child tax credits. The plan also expanded the tax credit for children up to $3,600 for younger children, up to $3,000 for children that's 6 and older. If you recall, our tax credit before was $2,000 per child, and before only $1,400 was refundable. So basically, a tax credit offsets the taxes that you owe. If you do not owe taxes, only a portion of it was refunded. Now the American Rescue Plan allows for the full tax credit to be refunded. So if you had low income in a year and your tax, maybe you had 2 children over 6 and you had a $6,000 or a $4,000 tax credit because it was $2,000 before, and those your tax liability was under $4,000, you could only get $1,400 of that $3,000 refunded to you. Now you would be able to get that full $4,000, which is now going to be up to $6,000 or $7,200 refunded directly to you because of the expansion of the rescue plan. The IRS has also been given a challenge with this to figure out how to pay this credit out monthly so people are not waiting until they file their tax return to receive this credit. That piece has not been figured out yet. I know this current administration had hoped that this could begin in July. I say it's a pretty big challenge with the IRS, who's already pretty bogged down with all the changes. So it's yet to be seen if they'll be able to start paying this out in July of this year or if it'll be sometime later. But the goal is to pay that tax credit out for people who qualify. And again, they're going to be looking at your prior year returns to determine if you qualify, but pay that out monthly versus waiting to the end of the year on your tax return. Some additional provisions that were in the act expand earned income credit by removing the upper age limit and lowering the age limit to 19. So now you could be 19 years old or older and still be able to receive earned income tax credit. And those provisions, that's going to be for 2021 only. So some of the provisions they provided back to 2020, like the unemployment provision, but things like the child tax credit and the earned income credit, that's going to be a 2021 provision. They also made note in expectation that either Biden or Congress is going to be moving to cancel some student loan debt. They've made note in this bill that any student loan debt that's canceled is going to be tax-free. So prior, if you had forgiven student loan debt and you didn't have an extenuating circumstance, like maybe a disability or something, your student loan debt forgiveness could be taxable income to you. So if you had $20,000 in student loan forgiven, that could be $20,000 in income you had to file before. This now makes it very clear that if any student loan debt is forgiven in the future, that this is going to be tax-free. Some other major provisions that we just want to make note of from the bill. There was a $28.6 billion grant program for restaurants and bars, one of the industry hardest hit with COVID-19. And each individual business be eligible for $5 million apiece. $15 billion EIDL funding with the priority to go to severely impacted small businesses that have 10 or less workers. So that's another issue where SBA, if you already have an EIDL loan, there's been some expansion there. There's been some expansion on the amount of the loan, but SBA will be reaching out to those that will now qualify for a larger amount or qualify for any particular grant. And then there was some additional $7 million to the Paycheck Protection Program, which was actually extended. The deadline there was supposed to be March 31st before that for that program to close. That is now extended to May 31st. However, many lenders, because the Paycheck Protection Program, you work with a separate lender, and then that program is funded by SBA, but you're still going through a third-party lender. A lot of those lenders are closing that down about 2 to 3 weeks prior to the deadline, just to make sure they can process what they have in hand. So if you're looking at doing a Paycheck Protection Program, we'll talk about that in a little bit more detail, but you want to get those applications in as soon as possible. And then $3 billion for a payroll support program for aviation manufacturers, $1.25 billion for the shuttered venue operators grant. These are more for concert venues, music halls, promoters. They're not for the individual artists themselves, but those organizations that support those artists or have resources for those artists to perform. Again, another very hard hit industry in COVID-19. So there's some funds there. And then $175 million for a community navigator program to make sure that they're reaching out to eligible small businesses, making sure that the information gets out there on what resources are available and helping businesses apply for those. There was some money spent for state and local aid as well, about $195 billion, $60 billion to counties, $10 billion for coronavirus capital projects. So basically help the states that have taken a lot of this burden to try to supplement its businesses, its resources when tax revenues are down and things like that. And then some funding towards infrastructure and COVID resources, funding for schools to get schools sanitized and safely reopen, improve ventilation, things, reducing class size, money for college and universities and things like that, just to get the American public back to normal as quickly as possible. And then there was some funding as well for different things like vaccines, testing, contact tracing, and other healthcare related funding. So, basically those were the major provisions of the act that passed. But because a lot of those provisions built upon things that were in place from some of the prior acts that were passed, one thing we do want to do is we want to go over some of the existing programs that are in place. Some are still going right now. Some are closed, but we want to go over what's out there to make sure everybody's taking advantage of what's available to themselves as an individual or a small business. So we're going to touch on some of the SBA programs. One of the first is the PPP program that we talked about. That's the Payroll Protection Act. That was authorized for a first and a second draw. So we're going to talk a little bit about that. We're going to talk about the EIDL loan, a great source of funding for your business if your business needs the help during COVID-19. It is a loan that's directly with SBA, a 30-year term at 3.25 to 3.75% interest rate. And we're going to talk about the EIDL advance, which is, it's not the loan itself, but it was the advance that was originally capped at $1,000 per employee. The goal was to try to get $10,000 to every small business, but there was not enough funding for that, so they capped it on a per employee basis. Now they've carved out a smaller portion and said, if you're a small business in these certain census tracts, you can still get up to the $10,000, even if you don't have 10 employees. But they're going to be reaching out to people that may qualify for that. And then we had the shuttered venue grant that we talked about, where the venue operators can get up to $45,000 of their gross revenue. So talking about the PPP loan, the Payroll Protection Program is a low interest rate loan. It does start off as a loan, but it is fully forgivable. So while it's a low interest rate loan and you sign loan documents when you get approved and you start up for it, but you soon after you get the funds, you have a process to get that loan forgiven, as long as you use it for things like payroll, mortgage, if you own the building, not a personal mortgage, but if you own the building your business is in, that mortgage, interest rate, and rent and utilities. The loan forgiveness, please keep in mind, if you're sole proprietor, that money can be spent on just paying yourself as the owner of the company as your compensation, because you're not running an actual payroll. So it's a really easy forgiveness process. You want to make sure you take the time to look at it. If you haven't done the PPP program, consider it. It's fully forgivable and it is not taxable, most importantly as well. Qualifying for the PPP is easy. Your business needs to be in operation as of February 15th, 2020. You could be an independent contractor, sole proprietor, business or organization with employees, or independent contractors with associated payroll costs. You do not have to prove economic injury for the first draw. For the second draw, you have to show a decrease in income in any quarter, compare it from 2020 to 2019 of at least 25%. And then you have to find a third-party lender that you can work with. It is outside, it's funded by SBA, but the actual process and lending is outside of SBA. Payroll protection loans, they're calculated about 2.5 times your monthly payroll costs. So if you say, well, I'm a business and I don't have payroll because I'm a sole proprietor, or I'm a Schedule C on my tax return, which could be one member LLC. There have been a caveat for those rules. They're actually going to use your gross income on your Schedule C. So they're going to take that gross income, they're going to average it for a monthly amount, and then multiply it times 2.5 to get the amount you would qualify for the PPP. Second round of PPP, as we mentioned before, you can get up to 2 rounds, but for the second round, you have to prove that you've had an economic injury, which is a reduction. It's defined by a reduction in income. I mean, I think most people have experienced some type of economic injury with COVID-19, but second round PPP qualifies it further and says you have to have a certain decrease in revenue for the second round. And again, if you're in a certain sector like accommodation and food services, so you have a NAICS code or a business code, and you can find that on your tax return, either on your Schedule C or on, if you file a corporate tax return, your 1120, 1120S, look for that business code. If it starts with a 72, then you can get a PPP loan at 3.5 times your average monthly income. So you want to take a look at that as well. Second round PPP qualifications. Previously used, you have to show that you have used your first draw PPP loan for the second round, or you will have used it. You have no more than 300 employees, and then you can show at least a 25% reduction in gross receipts when you compare quarters in 2019 to 2020. You want to show in 2020 that you've had some type of 25% reduction in any one of those quarters. It does not have to be in every quarter, but any one quarter with comparing 2019 to 2020. You do want to make sure that you've at least applied for forgiveness for that first round, and do remember that you don't have to have this particular qualification for the first round PPP. Anyone can get the first round PPP as long as you've been in business by the deadline that was set, and then that you had some type of compensation or payroll, or sole proprietor, you had some gross income. It's just the second round. To get a second draw, you have to show a reduction in gross receipts. Another caveat to mention is that with the PPP loan, there is one loan for each entity, so one loan for each EIN number. If you have multiple companies, you can do a PPP loan for each company. You just can't use the exact same payroll. For any business owner as well as their employee, the payroll is capped at $100,000 a year. So if you're using the payroll of one person, you're capped at only $100,000 a year that you can use for that 2.5 multiplier when you average that over 12 months. So if you have multiple businesses and you're the only owner in each, you're going to be capped when you get to that $100,000. But if you have a business that have some owners and maybe your payroll as an owner is in a separate business, you can do a PPP loan for each business. The forgiveness application is fairly simple, especially for loans that are under $150,000 and loans under $50,000. Under $50,000, it's basically a one-page application that you go through the forgiveness process and you just certify that you've used those funds for yourself for compensation. To go through the application, you're going to need your tax returns, your bank information, some personal information. If you have payroll, you're going to need those payroll reports, the 941s, the quarterlies, your EIN number, etc. So you want to make sure you have all that information available to you. Again, as we mentioned, the payroll program has been extended now. Payroll protection program has been extended now from March 31st to May 31st. It said here legislation pending, but that legislation has since passed, so it is officially extended. Just a quick snapshot of what that application looks like for a Schedule C filer. It's a pretty straightforward application. You're going to give your business information. You're going to state your NAICS code and make sure that matches your tax return. And then you're going to give them your gross income. You're going to give them your monthly average, and you're going to use the multiplier to see what amount you would qualify for. And then that with your bank statements, as well as your tax return documentation and personal information like a driver's license, is all you should need to get that PPP application started. Also want to mention the EIDL loan, or the Economic Disaster Injury Loan. These loans were approved, prior to the week of April 6, 2021. So any loans that were approved prior to April 6, 2021, which is just this week, is now going to be eligible for an increase in the loan amount. So if you had a loan with the with SBA for the EIDL and they gave you a limit and said this is what you're approved up to, they have now changed that formula, and most people are going to be approved up to anywhere from 2 to 3 to maybe 4 times that amount. So SBA has said they have a lot of loans out, a lot of businesses that they worked with. They cannot take the influx of calls. So they're saying, don't call us, we will call you. So starting this week, they've been reaching out to all these business loans with business owners that have prior EIDL loans and sending in email, basically telling what the process is to apply for the increase or to see if they're going to be eligible for an increase. So SBA, watch out for those emails. They've started this week. They're coming directly from SBA, and they're telling you what process you need to go through to see if you're going to be eligible for a new loan amount for your EIDL loan if you have one. If you have not gotten an EIDL loan and you do need business funding, it is not too late to apply for the EIDL loan. If you go to sba.gov website, there will be links there that you can go to. That loan, again, is directly with SBA. This one, unlike the PPP, is not with a third-party lender. You're dealing directly with SBA. You go directly to their website to do the application. You'll be contacted by SBA for the processing. And, you know, we'd be remiss not to mention that this is a loan term of 30 years. So as many of us business owners know, when you go to get a business loan, normally we're dealing with the bank. Even if it's an SBA 7A loan, you're still dealing with the bank, and the term is usually a 10-year term at some floating interest rate that is going to be based on the current terms that are going at this time. So this EIDL loan is a fixed interest rate. It's 3.25 for nonprofits, 3.75 for for-profit businesses. And it's going to be amortized over a 30-year term. So very small, very low payments. I think people that have a $150,000 loan, they're paying a payment of maybe $745 per month based on the interest rate and the term of the loan. For anyone who did the EIDL loan early on last year around this time, we know about the EIDL advance that came along with it. It was originally going to be $10,000. They modified it to be $1,000 per employee. Now they've modified it again that says if you are in a low income community based on your address and your census tract, SBA is going to reach out to you by email and say that you have the potential of now qualifying for the full $10,000. But what they're going to ask you to do is to report all of your revenue by month for 2019 and 2020. So you need to have that data information ready. You give them the amount of revenue that came in each month, cash flow basis. So based on your basically your bank statement for each month of 2019, each month of 2020, they're looking for an 8-week period that shows a 30% reduction or more. If that reduction is there for any 8-week period and you are in that census tract, you actually qualify for the increased advance funding. So if you are one man show and you only got $1,000 on that EIDL advance, you can get the additional $9,000 if you meet those criteria. And so again, it's a situation where SBA says we can't take the influx of calls, so you don't need to take any action. They're going to be reaching out to you. We talked a little bit about the targeted shuttered venue operators grant. That's up to $45,000 of gross revenue. You have to be in operation, but as of February 29, 2020, it's for the venues and the promoters. And if they received a PPP loan on or after December 2020, their grant is actually going to be reduced by the PPP loan amount. But if you have any of you are shuttered venue operators or promoters, please look into this grant. It's also directly with SBA. Other sources of capital or resources for small businesses, we have Green Line Venture Loans. Lift Fund has a loan program. Comcast Rise has done several grant openings. The latest one that they did in Atlanta is closed now, but we've seen several come up as well, so they might have more in the future. So try to get in contact or get on the mailing or email list for Comcast Rise grants. ACE has a loan program. They're here in the Atlanta area. There's crowdfunding by kiva.org. Counties and cities are always got resources that are going, depending on for certain industries, sometimes small business wide. So you want to stay in contact with your county or your city to know what programs are opening up for small business owners, as well as always check out the website with Invest Atlanta. The IRS has an employee retention tax credit. So if you have payroll and you have employees on payroll that you've retained through COVID-19, you have the potential, and you've had some revenue reduction, you have the potential of getting an employee retention tax credit through the IRS, through your payroll provider. So check with them about that as well. We always like to end kind of our information section with some different tools and resources that are available to small businesses, from bookkeeping, from payroll, basically different apps you can use to organize your receipts and expenses like Shoebox, Expensify, tracking your mileage with things like Mileage IQ. So we like to basically provide those resources for anyone that's not currently using some of these programs and they need some help with their small business. So right now we've kind of spit through the detailed information just so we can open the time and have some discussion with the question and answers and just some open discussion about some of the information that we talked about. So I don't know, JR, if you want to kind of jump in and if you have anything that you want to add on the information that we've talked about.
Yeah, I mean, and it was a lot of great information. And the one thing you'll see about this, and this is the thing, you know, I've been on the phone with the president's office, both administrations, with the SBA at their head office, the regional SBA, senators, congresspeople. This is the thing. I don't care where you are in America. Everybody wants to help small businesses. And this is something that has been the case. But the thing that we saw was that most of the people did not know how to help small businesses. Okay, and so they didn't have the right tools or the right way to actually distribute this information. Some of the small businesses have been afraid to even apply because they don't think they qualify. They don't think that, hey, if I put this time in, it's going to happen for me. But as talking to one of the head SBA directors in this region, he said, JR, I promise you one thing. 100% of the businesses don't apply. 100% of them will not get anything. So, and that's just really to say, if you want to get this stuff and make this available to you, you have to apply. So, and all of these different programs are different. I will say that the EIDL is a phenomenal helping businesses over the past 20 years and seeing the money and access to money. This is the cheapest money that's out there as far as loans. And what you're and as Lisa mentioned, you know, the difference, let's just take, for example, a loan that you get through the EIDL. It may be, let's just say if it's $20,000, let's just say on the low end, right? Well, because it's based off of a 30-year term, and then the rate is depending on if you're a nonprofit, it could be as low as 2.75. If you're a for-profit, it could be as low as 3.75. You're talking about your payment every month being around $40 or $50 a month. And then you're talking about that payment because they're deferring the payments for like a year. You're not even having to make a payment until a year. This and so this is extremely important. And this is something that as a small business owner, you want to take advantage of because, for example, that same term loan or line of credit with a bank, you may be spending $400 or $500 a month, almost 10 times the amount when it comes to payment. And in addition to whatever you would be paying in interest. So this is very good for cash flow. And when you're talking about the PPP, as long as you're using it for things like payroll and other expenses that are associated with payroll, this is free money. And so, and the biggest thing I always tell entrepreneurs is it's not that, you know, even if you get qualified for this money, it's how you spend this money. Okay. You want to make sure you're spending in the right areas because for a lot of us as small businesses, this may be the largest amount of capital injection that we have ever gotten. And maybe for some of us ever will get. So we want to make sure that we spend it in the right areas. And that is making sure that, you know, when you get the funding, when you have it in place, the simple thing with the PPP is that it's pretty simple. Just pay yourself, pay your employees, you know. These are the simple ways that you can spend that money. But when you're talking about if the either the EIDL or the EIDL Advance, that is something. The EIDL Advance is a grant. So that even though I always say to make sure that we manage all money the right way, even more so you want to make sure that you manage your loan money, okay? Because although the interest rate is extremely low, and this is something that you could that I really tell people, if you have different, whether your personal credit cards, business credit cards, whatever, right? I would pay off all of your other loans. Let's just say you have income. Now, it's very important to understand this. This money is set. It can pay off things like lines of credit and things like that but you're not supposed to pay off other types of loans with this funding. But this is the thing. With this funding, essentially operating and covering all of your expenses for your company, right? You're going to have cash flow left over that you bring in as far as income from your company. So my typical advice I tell the entrepreneurs is take that income and definitely you want to use it to grow your business, to stay in business. But a lot of companies that I have seen have either bad debt or not debt that's not really benefiting them as much, to use some of their income to try to pay some of that bad debt down and continue to operate, especially if it's something above 10-12% interest. But this is a phenomenal opportunity, and I just tell people, don't wait to the last minute to apply for this funding if you can, because what we end up seeing is that most of these banks end up shutting down what they're doing about probably about at least 2 weeks, sometimes sooner than that, than the actual deadline date from the government or the SBA. So meaning that if it's the due date is in May 31st, right? Most of these banks are going to probably stop accepting applications probably around the 10th of May, probably around the 12th of May. That's what we saw before in both rounds of the PPP. So, and even what happened with this before they extended it, most of the banks were already shutting it down. And so, and Lisa provided some names there. We have some other names that we can look at helping and going through. But yeah, what I want to go ahead and do is open up the floor for questions. Alan, Son, if you all have any questions, Dr. Clark, if anybody has any questions, please feel free to ask us, and we're going to try our best to answer all of these questions right now.
I have a question. If you could talk.
I can't hear you.
I was asking about if you have multiple businesses, if you could talk a little bit about that.
Yeah, totally. So I have multiple businesses. And so, I run several companies. And with that, I applied for the EIDL, and I got an EIDL advance for each one of those companies, and which had nothing to do with the amount of employees that I had. That was basically going off of the revenues that I had, my gross margins, and how much cash flow I had in my business on a monthly basis, right? And that's what they really dictated to really grant what amount of the loan I was going to get. And then on the PPP side, that does require you to have either for yourself, if you're a sole proprietorship, or if you're an LLC and you're just a single member LLC, more than likely you're being taxed like a disregarded entity. So you're gonna fall under that same scenario. You would be your own employee, okay? Because a lot of companies think that they don't qualify because they don't have any other employees outside of themselves. But depending on the entity that you're in, you could be your own employee. And so I would say, yes, this has been phenomenal for my companies, and as well as the other companies of people that own multiple entities. And as Lisa was saying, you can apply as long as you're applying with that separate EIN number for as many of those companies on the PPP side and the EIDL side. And so, Lisa, you want to touch a little bit more on that?
I do. And the only caveat is whatever limitations that are put in place, there's, like I said, with the PPP, there is a payroll cap of $100,000 a year. So if you're the only owner in each one of those entities and it's only your payroll that's covering, they're going to cap it at $100,000 a year, no matter how many entities that you have, where that's what they're going to use to do the monthly average and then do the 2.5 multiplier. SBA has modified many of the applications now, and they ask you to disclose if you have multiple companies or if you have multiple companies applying for the PPP, so they can take and aggregate all that information to make sure that as a whole, the companies are not over the cap that would apply, especially if you're one owner that is sharing your payroll between multiple companies. By payroll, we really mean your compensation. So those things will be taken into account. But for the EIDL loan, that application is by EIN number. So if you're sole proprietor, your Social Security is the EIN number that you're leading with. If you have other companies, then their tax ID number is what you lead with. So a lot of these programs are by EIN number, so you can multiply with multiple companies, with the caveat that some will have limitations.
Yeah, and I think that's big. You want to go. What do you say?
If you could just follow on with that, with the EIDN. Two of my entities were started in 2020, so they don't qualify for having loss for PPP. But can you still apply for EIDL for those entities?
When did you start it?
Started in 2020, January, or in 19, at the end of 19.
Yeah, that's great. That's great. So you actually, if you so tell me about the entities. Are they sole proprietorships, or are they corporations where you pay payroll?
Right. The entity that I actually did PPP with is actually an S corp, and that one, is fine. The only thing that I'm doing with that is applying for this additional expansion of the EIDL. But the other two entities, one is an LLC. I'm the only member, and then the other one is a C corp, and I'm the only owner. And I was wondering if I could get EDL assistance for either of those, and what I would need to show to qualify for those entities.
Yeah, so I started the company at the end of 2019, and in that case, I did get EIDL funding for that business, and because it was a new company and I was paying myself in January as a W-2 employee. Okay, I was able to also get the PPP for me and my employees that I had hired at the beginning of the year. Okay, so as long as you are on the PPP, you may still be qualified for that through your Class C corporation if you were running payroll for yourself in that first quarter. Okay, so when it comes to the EIDL, yes, you can qualify for that. Also, we got approved for those. Also, Lisa, you want to touch a little bit about some of the things when it comes to actually the applying for the EIDL and the things that he will need to submit to the SBA.
Yeah, basically the EIDL application is all online with SBA. I believe the website might be covid19relief.sba.gov, but basically if you go to sba.gov, you can find the links to it to get to the application. Yeah, they're just going to verify that your business was in existence. They may pull transcript with the IRS to verify it has filed tax returns. They're going to do a credit history pull, but they're not as concerned about your personal credit history. They're more concerned about the cash flow of the business and can it support that EIDL loan. And it does have a date for when that business had to be in operation. For the PPP, it was February 15, 2020. I believe the EIDL is sometime in February 2020 as well. So any business started in 2019 should have the ability to apply for that economic injury disaster loan through the SBA website and go through the process. But it's, you're going to have some tax return information, some personal information to upload. They do not want you to use a PO box, so you have to give a physical address for the business, some banking information, and that should be enough to start the process.
What I will say is, these are some, and one thing Lisa said, they may ask for X, Y, or Z, but in the beginning when you're submitting, you're not going to have to submit any of that stuff, but you just really need to have the data, and then it's really the computer really does almost like a pre-approval or a pre-denial, where it will go through and say, hey, we're gonna based on this initial information, we're gonna give you kind of like a pre-approval, but you still got to go through. They may ask you for other clarifying documents later, and that's what Lisa was talking about. Those other things they may ask you for. I've had customers that went through and clients that went through that didn't have to submit anything, and then later on during the process, it was fun. It wasn't a good thing, but we had one person who got approved, who didn't have to submit one thing, and they got approved. They even got the money sent to them, but they put the wrong bank account information in there, so deposited it in somebody else's account. They had to withdraw it from their account, and they told them, and so they were saying, hey, when are you going to redeposit it back in? But at that time, guess what? They said, hey, something's changed. So now we want this extra information from you, documentation. So they made her go back through and send, and she had to come up with all this other documentation later to give it to them. So it all really depends.
Yeah, and you're right, Jer. When we started the process, it was early on, and they didn't have a lot of this kind of laid out. And so now as you're going through, so a lot of people got approved for loans, they got funded by the loans, and then maybe 3 months later, SBA came back and asked for this information, or they asked for a 4506T that allows them to pull transcripts. Now, because of the amount of fraud that they've experienced, they are asking for a lot of more of this information up front.
Now, is
Correct.
the transcripts for the business or for the business and the individual in the case of an S corp?
So in the S corp, they're going to ask for the business and the individual.
Gotcha. Okay.
Yep. And then
What other questions do we have here? Let's look, son. Is that all your questions, Bafana, before we go on to the next one?
Yeah, I appreciate you calling me out. Make me ask the question. Thank you.
Yeah, I want you to, man, because this is the thing. We're here. I want to make sure that, you know, we answer all these questions, because this is not just to give information. We want to make sure that you can give this information and that you can go apply it, okay?
Got it. Thank you.
definitely.
Most definitely. Son? Son?
Yes.
Yes, what questions do you have?
I'm okay. Thank you. Thank you so much.
Okay, no problem. Alan?
Yeah, I have a question that's specific to the EIDL increase in funds. I think we've taken out the 25,000 on EIDL that doesn't require SBA to take any type of stakeholding on company assets. If I go in for an increase of that loan amount, what type of assets would the SBA be looking to secure for that increase?
So I can answer that, JR.
Go
So
ahead.
basically, if your loan is going to be 150,000 or less, you're still not providing a personal guarantee, but they will ask you for a listing of your business assets. So they're going to look at things like equipment, office furniture, anything that's owned in the name of the business. So computer equipment, vehicles, if it's listed in the business's name, office furniture, and they're going to ask for a listing of those assets. And then what they're going to do is file a UCC filing in your county that says before the business or those assets are sold, SBA would basically have to be resolved in their loan before you'd be able to sell. And so they do take a security interest in those assets by the way of a UCC filing that they file with the county that you're located.
Okay, and generally, what is the ratio they're looking for in the list of assets to the loan amount?
You know, to be honest, they have not been looking for a ratio. They're just want to secure with whatever assets you have. There's not been, basically, in order to qualify for the loan, they're just looking at the business can cash flow the payments. They've not required a specific ratio on the assets of the business. They will require that you have insurance that covers those assets. They'll ask for that and some proof of liability insurance, or basically business property insurance on those assets, but they've not required a ratio in the past.
Okay, thank you, Lisa.
And what I'll say is this, Alan, like you got to look at it like this. I mean, for what they're asking for and the fact that, you know, up to, you know, $150,000, you don't even have to do a personal guarantee. Like, I mean, you know, in most businesses that I've talked to don't really have any and this is, and what this is essentially saying is they don't care about the assets that you have. What they're saying is if you have assets that if in the case that you can't pay this back, okay, that they're now gonna look at trying to have recourse through securing those assets from you first, okay? So if you never go out of business, if those never things, it's almost a moot point, right? So this is and with that, you know, my advice just from a, you know, or what I would do, I would say would just be to, you know, if your business needs these things, I would try to take advantage of as much as I can, because I've never seen rates like this. Even when I talk to people and they're looking at outside investment from investors, like this is why a lot of investors right now are having a little more difficulty investing in companies, because the rates in the ease of access to funding right now is high. It's easier for businesses to get access to cheaper money. And so this is one of those cheaper money sources. So, you know, I wouldn't, you know, like I said, for the things, unless you're getting above like that 150 amount and it's something where you think you're going to have a personal guarantee, even then, right? That's not a necessarily a bad thing if you're if this on this end. And for everybody, so that you understand and know, and I'm not assuming that everybody understands what it means to have a personal guarantee. These loans right now up to 150,000, what this means, not having a personal guarantee means that is a non-really recourse loan, okay? Which means that if you end up defaulting on this loan and you can't pay this loan back, they cannot come after your personal assets because you did not personally guarantee that this loan was going to be paid, okay? Now, your business is responsible for paying it back, but it's in essence like when you form an entity, and that entity ends up protecting your personal assets, but you know the entity is made available in a lawsuit. If it was ever to get sued, the assets of the business could be at risk, even if they have an entity. But the reason why most people set up these entities like corporations or LLCs is to protect their personal assets. So when you're talking about loans that don't have to have personal guarantees to them, what the government or what the bank or what any lender is essentially saying is that if in the case of you defaulting or not being able to pay back this loan, that we will not come after you personally. And if the business no longer exists, then the debt dies with the business. You know, so that's just something I just wanted to make sure that I pointed out, just so that you all would understand, you know, what it means to have a personal guarantee on something and what it doesn't. Lisa, do you have anything to add on that?
No, I think you fully covered that. Just for any business owners that may be looking to sell their business during the term of this loan, just recognize that the loan has to be resolved prior to the sale of a business. But
correct. And I'll say this, listen, you know, if you have any other questions, just make sure you have some good people on your team that you can kind of talk to, but don't overthink it. Okay. The point of this is the whole point of this process was to help small businesses so that they could stay in business, okay, and so that they could keep their employees employed, okay. So you got to look at the heart of why this is been even given in the first place. This is not, you know, they want to do whatever they can, and when I say they, I mean the government, I mean the monies, the SBA, where this has come down through. They want to make sure, because they know that small businesses are the lifeblood of this country, and they want to make sure that small businesses stay in business. And these are the measures that were laid forth to make that happen. So I believe we have a few minutes left. If there are any other questions, or Dr. Clark, if you want to have anything to add, or Lisa, do you have anything that you want to add at the end here?
no, I just, you know, we at the end we kind of listed some different organizations that you want to stay in contact with for future resources, just to make sure to go through that. Make sure you stay in contact with your county, your city, your chamber, all these different programs that we think there will be additional programs that should come back out that will allow for small businesses to take advantage of those. So make sure you stay in touch with that.
Most definitely. Anybody else? Do y'all have any other questions that y'all can think of? Dr. Clark?
Yeah, thank you so much for everyone to be on this call today. And we look forward to sharing this information with you in terms of any more specific information shared with you. We'll get you the presenters' information out, and look forward to hopefully seeing you next week for next week's session, which will be on the PPP loans, more specific information about that. So thank you so much, everybody, and have a wonderful Thursday afternoon.
Thank you.
Thank y'all so much.
Thank you, guys.
All right, take care.